So where are home prices going to be in 10 years? Well, that's exactly what we are going to get into in this video and let you know a few different scenarios of what to expect in the coming decade. And before we jump into it, just as a quick reminder, I'm Chris Erickson with the Beach Life Group. If you guys ever need anything, buying, selling, just some information, hit us down below. All our information is right down in the description. We got your back when making the move here in San Diego. So we all know there's been a really big changes in the market over the past few years with crazy price appreciation, as there has been a frenzy over these past few years, multiple offer situation, a lot of bidding wars. Interest rates have gone from sub 3% all the way above 7%. With all of that, I think a lot of people are losing sight with the long term, the big picture. Why are you actually buying real estate? And so me personally, we're thinking about selling our house, buying another one. And the biggest factors are going to be, where are we going to live? Where's the kids going to go to school? Kind of what communities are we going to be in? And what's the lifestyle going to be like for the long term? Not necessarily for the next year or two, but for the next decade. So what happens in the next few years? Yes, obviously always important, but I think the bigger picture, what's going to happen over the next decade, is even more important. Before we get into the three scenarios, I want to jump into the 7 factors that do affect real estate prices. Number 1 is going to be the supply and demand, which we talk about a lot right here on this channel. How many people are looking to sell their home? How many people are looking to buy? Obviously, that ratio has been skewed over the past few years, but it's one of the biggest factors when figuring out where home prices are going. Number 2 is going to be the cost of ownership. This has to do with how much does it cost to get a loan? What are interest rates? What is the access to loans? And so this plays a big factor. Obviously, right now with elevated interest rates, that supply and demand, there's still less supply, but there's also less demand. So that does play a big role in home prices as well. Factor number 3 is going to be job security. Currently, San Diego, we don't really have issues with our job market, but as with anything, there could be big turns in the market, and potentially, if there is any big moves in the unemployment rate, obviously that does affect you, people, homeowners, especially when you're paying those monthly mortgage rates. Another big factor is population growth or potentially population decline. Now, San Diego still has a little bit of population growth, whereas other cities around California have not. They've seen that decline. So if San Diego just continues to stay neutral, how will that affect pricing? Next up is going to be regulatory changes, or what's the government going to do? Are these new regulations, SB 10, going to affect home values? Are they going to make it easier to build here in San Diego? Obviously, we don't have a ton of land left anyways, but what is San Diego going to do? What is California going to do with the current housing crisis? Number 6 is going to be global factors. There's just a lot of moving parts in the world. If something happens in another part of the world, it could potentially affect home prices here in the United States and San Diego as well. And number 7 is going to be replacement costs, or the cost to build. And while we don't have a ton of new construction here in San Diego, the cost of construction still does play a role in our local housing market. So hopping into the first scenario, we're going to go with what happened for the last 10 years and expand it out over to the next 10 years. So here's the last 10 years from 2022 going back all the way to 2012. You guys know what happened before that, which will be scenario 2, which we'll get into. But you can see back in 2012, the median home price was almost $85,000 and continued to grow every year since, going all the way into 2022. So you can see, start in 2012, we are coming out of the Great Recession. Interest rates are fairly low at this part. And over the next 10 years, that continued growth until we got to 2020, where we saw huge jumps in growth. And during these few years in here, this is when a lot of people were refining. This is when interest rates were in the 3% range. So a lot of that, with what happened during that year, everybody was looking to make a move. There was a lot of people for every single property driving these home prices up, where they were getting multiple offers. They were going well above list price. And now if we see prices continue to do what they did over the last 10 years for the next 10 years, prices are going to be over $2.1 million. Obviously, I think this is going to be the least likely scenario, because I don't think we're going to see the past 10 years what we are going to see in the coming 10 years. For the second scenario, we're going to hop in to see what will happen if the market did crash. You guys all know that we did see a significant market crash kind of start in that 2005 range. So during the last run up, you can see even going into the early 2000s coming up, and it really ramped up here in the mid part of the 2000s, peaking out at 2005 at $602,768. Then we saw the crash. It started kind of slow, a little bit of a drop in 2006, 2007, a bit more. This is when things started ramping up, and the bottom was 2009. We did see a few other years in here that just kind of hung around. They didn't really see too much of a gain, too much of a drop. They just hovered right around this mark, even going into the 2012, which we saw earlier before we saw the growth we have seen over the past few years. Now, for this scenario to happen, there's going to have to be some change in the market. Currently, like I mentioned, the supply and demand ratio is super skewed. There's no homes. Okay, I'm not going to say no homes. There's very few homes on the market compared to what we have seen over the past few years. Even compared to last year, we have about 40% less homes on the market here in San Diego than the previous year, which was still very low. The other factor is going to be interest rates. The higher the interest rates stay, I think the less buyers are willing to pay a premium, and buyers are still buying homes. There's still homes being sold out there. They're just a lot more cognizant of the offer price because ultimately that is going to affect their monthly payment. And there's a few other factors that would need to happen for this. A ton of supply coming on, meaning foreclosures or something that we're not even seeing out there that causes a lot of homeowners to sell. And one thing to think about is that a lot of people here in San Diego, a lot of homeowners over the past few years, when rates were historically low, refied their house. So now they're sitting in their home and they don't have a huge payment. They're comfortable with their payment. They have a 30-year fixed rate. And so if they don't need to move, if they were thinking about moving up, just wanted some extra square footage, they might likely stay. So the supply, the number of homes coming on the market is not going to jump drastically from that front. So during this time when prices did go from 602 all the way down to 358, it was about a 40% drop in the median home price here in San Diego. And if we saw that going into the next decade, if we did lose 40% over the next decade, home prices would be $544,000, just over that. And like I said, I don't think we would see that since the last time that this did happen, the crash was due to the housing market with bad loans. A lot of people got foreclosed on. There was just a lot of that recession due to homes. This one, not so much. Like I said, a lot of people have dialed in their mortgage rates. They are super low. The lending is a lot tighter than it was back then. So there's not as many bad loans as there was before. So the factors are just not lining up to see this over the next decade. And scenario 3, I think would be the most likely scenario is where we see home growth. It's just relatively low. Since that last chart, you did see home growth was about 5%, averaged out throughout the years with the ups and the downs and the in-betweens. But I'm going to use a number a little bit more conservative than that. Let's say it's a 3.5% growth rate over the next 10 years, 3.5% every year. So it's compounded for the next decade. And if we crunch the numbers, 3.5% growth rate over the next 10 years, the home price starting at that $908,000 will be worth $1.22 million in 10 years. And to tell you the honest truth, nobody really knows what's going to happen over the next 10 years. All these are 3 different scenarios, plus there's a million other scenarios that could happen here in the San Diego housing market. But I want to know what you guys think is going to happen over the next 10 years right here in the San Diego market. Drop us a comment below. Let us know. And if you guys are thinking about making the move, just as a quick reminder, we are real estate agents right here in San Diego. So I'm Chris Erickson with the Beach Life Group. If you have any real estate needs, you got questions, book your discovery call right down below in the description. We got your back when making the move here in San Diego.